So, Seasonal Vantage Insiders, Alex here. So, today's date, it is the 23rd of December 2024. I'm doing this video at about 1:50 p.m., about 2 p.m. So, we are nearing the Christmas already. So, today's date, it is, as I mentioned, right, 23rd, right, Monday afternoon. So, okay, just in case you don't know, okay, so-called the Wall Street Santa Claus rally. Okay, it is the last 5 trading days of December and the first 2 trading day of January. Okay, so which means that the last 5 trading days of December will be the 24th, okay, 26th, 27th, 30th, and 31st. So by right, the Santa Claus rally, okay, should start today, not today, tomorrow, okay, tomorrow onwards until the end of the year and into the uh first 2 days of January. Trading days will be 2nd and 3rd, okay, so just in case you don't know over there. And most likely, okay, today will be my last weekly video for the year. So next week I will see how it goes. Maybe I will give you another update, but not confirmed yet. But for the Facebook and the YouTube public live stream, right, okay, tonight 10:30 p.m. will be the last live stream, okay, public, okay, for the year. So next Monday 30th, there won't be any live stream, okay. So let's go through what has happened last week. Of course, last week, okay, the S&P 500, this is the cash index, had a very steep sell-off, okay, 18th December, that's Wednesday, when the Fed actually announced the so-called the interest rate cut. Okay, of course, they also say that next year there will be most likely only 2 rate cut and such. Okay, the market give a reason to have a correction, a sell off. You can see that the Dow Jones, okay, I think 10-day consecutive losses as well. So this is the Dow Jones, okay, and then yeah, for the Nasdaq, okay, it is also very steep sell off. So for this coming week, okay, what will actually happen? Okay, so let's head back to the members area, okay, and recap what has actually happened. Okay, just in case you don't know, okay, you're not aware. So last Thursday, right? Last Thursday, I did a SVI members only webinar on 19th of December. So the webinar was done on the 19th of December, okay, but the replay was published on the 20th, okay. So for those who haven't watched, you can log into the members area and watch it, okay. So just a very brief recap over there, okay. I said that we are so-called almost there, okay. The VIX, okay, we are near the 1 standard deviation, which is a normal size pullback, okay. And if historically, if there's a correction near 2 SD, then it is near a market bottom already. 3 SD, okay, it is a very steep market crash, okay, then you can just buy that kind of thing. But we are at 1 standard deviation, which is a pretty good, okay, correction. So I won't go through that again. So if you want to go through that, okay, please watch the webinar replay. And this is just a very brief summary over there. So as I mentioned, right, okay, if you watch the webinar itself, you'll have better details and also a better context for you. Okay, so you can watch it. And also that I'm still looking back at the IWM, the small cap as well. Okay, so before that, okay, last week, of course, it was a very broad market sell-off. Okay, so it is normal. It is normal if you had your swing position get stopped out. I also get stopped out. It is normal. So that is the reason why I mentioned in the webinar that where to place your stop loss, position size, so that every single trade, okay, it is only about 1 to 5% of your capital for swing trading account lah. Okay, so could be 1%, 2%, 3%. It's up to you. So for me personally, I use about 2%. Okay, so you already have a fixed loss. So when you entered, okay, you should really assume that this could be stop out. Okay, yeah, so any single trade, okay, should not kill you, or any single trade you should not feel very painful, because as I mentioned, every single trade should be just 1 to 3% of your account size only. So, you shouldn't feel painful, okay? All right, so let's head back to the last Monday. All right, so I mentioned quite a few things over there, okay? So XVI, I get stop out, okay? IWM, okay? I enter, I get stop out also, okay? And I also enter into a Nasdaq, I also get stop out. So 3 stop out, okay? Which means that about 6% is down, okay? Of course, previously, okay, all the that previously I mentioned, what did I mention? Okay. So last week was not a so good week. So get 3 positions stop out. Okay, so 3R is gone. But the good news is, let me see. The good news is, okay, previously all the profit, okay, are able to cover so-called the losses, because all in all, as I mentioned, right, you just need 50% win, you can still profitable. So you can see that previously, like the 1.5 R, but previously AVGO and all this, okay, also 1.5 R. So it cover cushion well for the losses. So once again, I repeat, if you get stop out, okay, it is normal because it's a very broad base, very likely, okay, it follow the tide, okay. Most likely a lot of stock will be coming down as well. Okay, so for me personally, as I mentioned, right, the DP gallery I mentioned in the webinar, okay, we are almost there, and you can see that on Friday, you can see that the Russell 2000, okay, and also basically the indices all got rebounded as well. Where's the Russell RTY, okay, on Friday. So I did the webinar on a Thursday, okay, and then on Friday morning, actually there is one friend who actually messaged me, say, oh, what, looks like Santa Claus is not coming to town, or Santa Claus rally, because during the Asian hours, right, okay, the indices, in fact, the indices and all this, okay, it actually had a steep sell-off, okay. At one point in time, I think it's also down about 1%, that kind of Russell 2000. And for the futures, okay, can you see that, this is the S&P, it was also down, okay. But deep down, okay, I know that, I think the sell-off is almost there already, because, as I mentioned in this DP gallery over there, you can see that the percentage of stocks above their respective moving average, 20-day, 50-day, 200-day, okay, it is at an extreme level already. You can see this is at a pretty low level, So prior to that, you can see that when it's at an extreme low, okay, less than 10%, okay, about 10%, okay, 13.4, of course, rebounded a bit, but previously it was pretty near about 10%. At the low, it all rebounded. At the low, it all rebounded. At the low, it all rebounded. Okay, at the low, it all rebounded. So again, this could be a big cat bounce, I do know, but short term wise, okay, I think there could be some rebound. How high the rebound can it go into a new high? I do know as well. Okay, but okay, as I mentioned, we are doing swing trade. Okay, we just need to catch the few days of movement, typically, 2 to 10 days, typically just a few days to at most 2 weeks of movement. That's all. Okay, and in fact, for the 50-day moving average, the market breadth is also at a relatively low level as well. Okay, and not only that, you can also see that the McClellan also at an extreme low also. Okay, a lot of times, okay, I think McClellan oscillator is a very good form of oscillator, not oscillator, as a market breadth oscillator over there. You can see that it is at an extreme low. You can go check it out. Okay, previous all the relatively low, okay, it all rebounded. Okay, and not only that, okay, I think it's been some time since I talked about the VVIX over VIX ratio over there. Okay. In fact, also John Nayer actually also mentioned that, told me, hey, VVIX over VIX ratio, it is showing sign of bottoming. Okay. You can see that, this is the VVIX over VIX ratio. You can see that typically this is at the market top, okay, at the market bottom. The market bottom, it is somewhere around 3 to about 4 level, reading 3 to 4 level. Okay, so this is a weekly time frame. Okay, weekly time frame for there. So it is not oscillator, so it doesn't have a very fixed value like like between 0 to 100. But based on the past history, you can see that relatively low level, it is between 3 to about 4 level. So you can see that Let me do a naked chart. So you can see that, based on that, based on the VVIX ratio, we are also hit the lower level. So we are also at an extreme level. So which means that the market, it is very oversold. Okay, and also there's some fear inside. So as I mentioned, there is could be a bottom. So we are almost there. So for me personally, on Friday itself, I re-entered into the Russell 2000. Russell 2000, it is actually IWM now. So which is this Russell 2000. And also if you actually use the volume profile, okay, we are also at a CPR point of control, okay, POC, sorry, POC, it is also at a point of control where there's a huge volume there, okay, but never mind, okay, that typically I'm just trying to say that, I actually had a position in IWM as well, so I get stop out once, but I re-entered again, so IWM, so my stop loss is again relatively tight, about 1.25, I entered at a relatively low, so 1.25 somewhere around at the bottom of that, okay. All right, so as I mentioned in the webinar, so it is more of a discretionary. There is no wash and rinse setup. Just feel that, it is relatively low. I just go in, okay, and test it out and test water. Okay, so this is IWM personally. And yeah, so for this coming week, okay, if you look at the gamma level, okay, at the gamma level, so it is at about 6,000 reading for S&P cash index. So for the SPX cash index 6,000 level, it is over there. So for the market to have lesser volatility, preferably no price to be above 6,000 level. But I think as of now, I think we are, again, as I mentioned a lot of times, okay, I could be wrong, but I think the sell-off should be almost there, and we are just in time, okay, for the Santa Claus rally. After a pullback, just in time, okay, for rebound, which also coincide with the Santa Claus rally. Typically towards the end of end of December, the market tend to be more bullish into the Santa Claus rally over there. Okay, so this is SPX. And if you take a look at the Dow Jones Cash Index, okay, if you put in the normal indicator, we are also at a support at the cloud level over there. Whether you are using a cash index or a Dow futures index, we are also almost there, somewhere around there at a support level. S&P, okay, futures, we also hit the lower range of the CPR and then rebounded as well. Okay, for the Nasdaq, okay, it is the stronger one. Okay, you can see that, after that sell off, hit the CPR, then form a tail, a shadow, and then rebounded up higher. So moving forward, I think this coming week there could be some more upside in terms of the indices. So, you can choose whether you want to enter the indices to make things easier for you, or the small cap indices, IWM as well. Okay, so personally, I prefer IWM because if you take a look at IWM over the SPY, S&P 100, okay, this is, the IWM is underperforming the S&P 500, but it seems that we are almost there also. It seems that there could be a rebound. If this rebounded, which means that the small cap will outperform the S&P 500. So if you take a look at IWM over the RSP, this is the equal weight S&P 500, okay, we are also, have a good correction over there, as in the ratio, okay, and then, it seems that, if really do rebound, then the small cap will also outperform the mid cap as well. So all in all, what I'm trying to say, I favor the smaller cap company for now. Again, I could be wrong. Okay, I could be wrong. So this is just my personal view. I could be wrong. So if you prefer S&P, you prefer RSP, if you prefer Nasdaq indices, go ahead. Okay, you can try it out. For me, I've positioned in IWM. So for this week, okay, calendar week, okay, 23rd to 29th, okay, this week, okay, not much news because we are into the holiday season, Christmas already. So only on Boxing Day, there is this unemployment claim. So for this week, right? So for this week, okay, I mean the data, okay, instead of the usual from Sunday to Sunday, I'll just cover from the Sunday until the end of the year. So which means the 22nd, okay, until 31st. Okay, So if you take a look at the data set that we have over here, so I have already pre-filtered already. Okay, so from 22nd until 31st. Okay, 22nd, of course, there's no 22nd, so start on 23rd. 23rd until 31st. So same for the ETF as well. So from the 22nd until the last day of the year 31st. Okay, so this is the ETF over there. So I just want to highlight certain asset classes. Okay, so you can see over there. Okay, GLD, this is the gold ETF. Okay, 24th December to 23rd January. All right, for the past 13 years, okay, 12 years, it has been going higher. And you can see over here, like the, okay, where is it? I saw the gold miners one. Okay, gold miners, RING is another gold miner, but GDX is also gold miner, so it's almost the same over there. So for the gold miners is 24th to 10th January. For the past 11 years, it's went up higher. So once again, for gold, can take a look at gold. Okay, there were some sell off. Okay, and then price start to seem to rebound a little bit higher. So again, I have a position in gold, more of a position trading. So most likely to hold until next year or so. So more of 1 or 2 months kind of thing. So I have a gold position. Okay, not a swing trade. Okay, more of a gold position trading. So this is my position. Okay, and for the previously, I think for the last two video, I also talk about oil as well. So I think that oil, there is also still some upside to go. This is the crude oil. Okay, after all, there was some pullback, but every time there's a sell off, the market rebounded a bit strongly over there. Of course, I don't really like the pin bar over there, but all I know, okay, I already have a position in USO already, so I will just keep it over there. All in all, it is still holding well at the CPR level over there. So I have a swing trade position in oil as well, using the oil ETF USO. Okay, so this is that. And if you're talking in terms of individual stocks, right? So there are 3 stocks that I am looking at. So the first stock that I am looking at, okay, it is actually Kim. Kim is actually Kimco Realty Corp, 25th of December to 28th of January. Okay, for the past 14 years, 13 years, it went up. Okay, and the average profit is 6% under the real estate, under the REITs, okay, sector. This is Kim. Kim, if you take a look at Kim, this is property. So it had a sell-off over there. Okay, I know it is actually below the cloud, but if you take a look at 2-day, okay, it is still 2-day time frame. So instead of 1-day time frame, it's a 2-day. It is generally still in a pretty good uptrend. Okay, and then all right, and then there is a wash and rinse setup as well. Of course, this might provide some resistance area over there, but all in all, I think I still quite bullish on Kimco. Of course, based on the seasonal data as well. Price action, there is some decent pullback, and of course, there is actually a star reversal signal, if I'm not mistaken. Okay, so I'm looking at Kim, okay, somewhere around there. Okay, so this is Kimco Realty Corp. Okay, so this is the day where price closed lower than the prior day low. So the prior day low, it is 23.27. 23.27. Okay, so on Friday it closed above 23.27. So let's see whether this coming week, okay, Kimco can continue to go higher. Okay, and the next one that I am looking at, it is this company called PPL. PPL, it is PPL Corp. Okay, 24th December to 4th Feb. Okay, for the past 12 years, 11 years, it went up. Average profit not a lot, but okay, 3%. This is under the utilities sector. So this is under PPL Corp. Okay, under electric utilities. So once again, for utilities, it has been coming down recently. So, once again, it seems like a good pullback. And then there is also a wash and rinse setup over there and a trigger. So this is on Wednesday where price closed lower than the previous day low. So the previous day low on a Tuesday, it is 32.12. Okay, 32.12. All right, and then on Friday, price closed higher and closed above the wash line, and the next resistance area is somewhere near the CPR. Okay, CPR at about pivot point at about 33.59. So let's see whether the price can continue to head higher into the resistance area at CPR level over there. Okay, so this is a PPL, and last but not least, the one that I'm looking at, it is PM. PM, it is called Philip Morris. They are a cigarette maker, tobacco. Okay, tobacco over there. So once again, there is also a pullback. Okay, so for PM, let me search for PM. PM, it is over there. So Philip Morris, okay, 31st December to 14th Feb, for the past 10 years, 9 years, it went up. Okay, under consumer defensive tobacco, average profit about 7%. And then there is also potential wash and rinse. There's no trigger yet, no trigger yet. Potential wash and rinse trigger. So this is the day where price closed lower than the previous day low. The previous day low, it is actually 124.46. 124.46. So there is no trigger yet. So I'm just keeping a lookout on that. It is under my watch list. Also, this is the Philip Morris. So let's see if the price can close above. Okay, close above the wash line. Okay, and hit higher. So again, this flat resistance area at the cloud might provide some resistance area lah. So all in all, I'll prefer the KIM and the PPL for now. So this PM is just to keep another watch out also. Okay. So all in all, I am still more gravitating more towards the bullish side for indices, whether it is a small cap or the key indices like S&P or the Nasdaq. Okay, for me personally, I have a position in IWM, a position in gold and oil as well. Okay, all right. So with that, okay, thanks for watching, and I will see you tonight at the public Facebook Live and YouTube live stream at MarketWise Asia Facebook page. So with that, thanks so much, and I'll see you again. Bye bye.